What's up, traders? I'm Mark Bauman, StartTrading.com. Thank you for catching us today for the market wrap-up for March 10th. Markets closed at 3 p.m. Eastern as usual, 1 p.m. Pacific. If you do not follow us already on YouTube yet, be sure to like, subscribe, and hit the notification bell so you can get our tips as they come in. Now, I'm Mark Bauman, owner of StartTrading.com, and I will be posting this video of my analysis today with more in-depth analysis of today's trading session. Till then, make sure to claim your free trading course at our website, StartTrading.com, and start trading. Make some money. Here we go. So let's go to where the market, let's put out my little blurb for Instagram there. So let's go to where the market was today and check out some of our trades. We are up only 1,160. We're up like $5 grand earlier. So what fell through? Okay, Disney was up quite a bit. Now it's not. AMC was up quite a bit. Now it's not. Yeah, it's mainly AMC and Disney. So let's take a look at our winners and who are going to be winners for the rest for next week, most likely. So it looks like CLNE, TTCF. So this is a clean energy stock, Clean Energy Fuels Corp, Tattoo Chef, and HOL, which I brought up yesterday as a buy. So we bought $3,000 worth of shares of Holicity Inc. Holicity is one of the, I believe it's one of the only publicly traded space exploration stocks. And then also Exxon Mobil. If you were paying attention, we recommend Exxon Mobil. There were some other recommendations from some other traders out there. See, StockMo was pushing, as usual, NIO and Tesla. NIO did have a good bump today. Let's take a look, though, at HOL. And XOM is on the, this is going to be a safe recovery bet no matter what happens to the market tomorrow and next week. XOM should continue to rise. But StockMo had NIO as his choice and CRWD. So I'm going to check those out in a second after we go through some of the picks that we had, just to see what the other traders are out there televangeling. So XOM, a little bit slow since we're doing this recording as well, but XOM today on the one day, woo, all the way up 10%. Or HOL, sorry, Holicity, all the way up 10%, 11.45%. And after hours, it is continuing to rise. So let's go ahead and load this in a better chart. After hours is continuing to rise, so that is going to be a buy tomorrow. Hopefully, pre-market will be the same. Now let's move on over to XOM. Oh, that's right. Caterpillar was also on the rise, someone just told me. So Caterpillar was also on the rise, and Caterpillar is another solid choice. Caterpillar, CAT is the ticker symbol, was exceptional in terms of performance over this past year, even during the downturn. So Caterpillar we bought more into and more options because we don't know if the correction is over yet or not, or if it's due for more of a correction. So we don't want to get caught up in the hype. So we have about 1/10 to 1/20 of our portfolio in Caterpillar. About 25 to 30% of our portfolio is in Caterpillar at the moment. And then another 25 to 30% is in Disney, and then another 25 to 30% is in clean energy and banking stocks, but low risk ones. So let's check out Exxon Mobil, also up on the day, 3%, another win right there. Exxon Mobil, I believe, is going to be relatively consistent compared to other stocks as far as their growth, though. I was not expecting as high as 3% growth, but I'm happy it happened. And you can see in the charts here that that we should be able to, that there's a steady climb happening with Exxon Mobil over the last month, which is rather fast and high than usual for that stock. So you can see that climb that's going to continue to happen as people are rotating into these other stocks. Exxon is going to be one of those kind of middle stocks. I think energy is going to really skyrocket during this time period, maybe for the next 1 to 3 months, and then maybe you might want to consider getting out of it. AMC had a big climb these last 2 days. We kind of bought in on the hype, hoping that it was going to push higher. When I saw that as I told you yesterday, TMV did not spike. So since TMV didn't spike, so the yields seem to be under control, at least leveling off at the market. We thought that we'd have some runs, but apparently AMC did not run. Same with CCIV. So I'm not going to go to the stocks as they are losers. They were winners earlier today if you got out of them after getting into them. But CCIV is one of my favorites because of the pricing in relation to the quality of the company. Fisker has been around almost as long as Tesla. They're just now finally getting their legs to run. And I think we're going to see a lot from CCIV thanks to that. And Lucid in the EV space, Lucid is relatively new, but they've been around almost as long as Fisker and Tesla. So they're like kind of right behind them. And from what I'm hearing from the executives that are over on that team, being taken off some of these other competitive EVs like Tesla, that they are going to have a huge run once they really get going. Now, Crowdstrike was a pick by Chris Sane. In his defense, he did say get it under 120, but it did lose 2.1% today. So glad we did not go with that pick. We were considering it, but I did not want to get into anything today because it was so volatile. I just wanted to play like AMC, CCIV. We bought XOM, and as I promoted last night, that we were going to buy Helicity. So true to that, we did, and we had a 3% gain. So win to us. NEO down 0.07%. I was also considering to buy NEO, but again, I don't know if the strength is there yet. It could have a pop tomorrow, but I bet you it's going to sell off tomorrow and then probably pop Monday. So tomorrow there might be an opportunity to get in on a low. Again, have to watch aftermarket. Looks like it's a little bit up, or pre-market, and see if maybe there's a change that could change my mind. But as of right now, still not super excited about getting back into NEO yet. I was in it, but CCIV is much cheaper. I got a lot more shares of that, especially the CCIV warrants. Let me bring those up actually. So CCIV warrants is something that you can get into. So CCIV was only up 0.98%, and the warrants only 0.08%. However, the warrants you can get $10, and they trail CCIV. So if CCIV is up, the warrants go up. The other day, it was the inverse. CCIV was only up about 5%, but the warrants were up 15%. So we made some huge headway there in recovering some of our capital that we lost from originally investing in them at their highs. And I believe as we ride it back up and we get back to those 3 to 6 month highs over the course of the next year, we're going to have possibly 100% returns by then. So excited for that, 30 to 100%. Last but not least, my strategy for this week to share with you are one of our other biggest winners was shorting Peloton and shorting Zoom. Yesterday, we got a little scared. We shorted 200 shares of Peloton and had lost 15% of our money. Actually, let me it's going to take too long to load. So let's that. Well, anyway, so if you bring up Peloton, the screen's going a little slow. But if you bring up Peloton, you will see that they had, let's see, there was a 9%, no, lost 15% yesterday, but we had already gained 9% on our short, and Peloton had dropped 10%. So super excited on Peloton and Zoom. I think they're going to continue to go down. Not excited for the company, but I had to short them because I didn't believe in them in the first place. Just thought it was a COVID stock. So all the COVID stocks, if you want good shorts, which I don't really recommend shorting companies for the most part, but if you want some good shorts, the COVID focused stocks are the ones that are obviously going to get hit the most here, because those are the stocks that were shooting high during COVID because of their usage during that time period. But we got the Peloton bike, and the wife's like, "Hey, I'm not even using it. It's just sitting here in the living room. What do you want to do with it?" I'm like, "Well, you bought it." let's sell it online or let's stick it in another room or put it in storage. So that's kind of, I think there's going to be a lot of those bikes with the same sad story of nowhere to go, and people want to kind of get out to the gym. They kind of, you don't want to always be working out in your house. It's not the most fun thing to do sometimes. You need that extra motivation. So people are going to be getting out there. They're not going to be using the Peloton bikes anymore. So they're still a great company, and I think the prices were just too high. We will probably buy back the shares at like $80 to $90 a share. So I'm hoping to write it down 20%. We'll see. It already dropped 20%, but I think it could go another 10 to 20% before it rebounds and has some steady growth, because it is a steady company. It's a great idea. I actually am not even into biking, but I concepted a similar idea about 7 or 8 years ago that I wanted to do, because I saw how obsessed some bikers are with doing. They like to go out and bike, obviously, but they're so obsessed with biking. They even have like competitions with their friends across the country, across the world, and so competitive cycling, I thought was going to be a huge, huge thing, and of course, it ended up being that. So we did make some money in the early days of Peloton. Zoom, I like Zoom. I don't use it so much. I didn't prior to the pandemic, and only because people wanted to use it during the pandemic did I actually use it. I usually use Skype because it's the chat feature, and more people are utilizing it. So I just don't see that company having the worth that it is. I feel like that thing's going to drop like a rock. It seemed to perform a little bit better today than Peloton did as far as dropping. They definitely have much more wider use cases for the technology than Peloton does ongoing. But I don't know. I don't see the future of Zoom being as bright as it's been lately. So that'll probably be a 10 to 20%, maybe more drop as well. So I'm going to hold on to my shorts and those. Again, I set trailing stop losses in those as well, as you should. So set your trailing stop losses. I should have done that today with AMC, but AMC kind of gets you here because you have that pride of the $150,000 in like 2 days on that sucker, and you feel like it's going to run again. So you get the FOMO, false sense of FOMO that I got building up. So if anything, if you got a lot out of today's video, please like or subscribe. Please share with your friends. We're going to be running a contest while the market's down. We are going to invite traders to come in where we are going to give you money to put in your own trading account, and you will pay us back as well as a percentage of the profits that you're able to generate by trading with us and doing our trades. So we'll be announcing that shortly. So if you haven't already, please share this video, like or subscribe. It's going to be a requirement for you to sign up to one of our links in our SIG for one of 2 of the 3 platforms we have listed, either Naga if you're outside the U.S., if you're inside the U.S., eToro, and then WeBull or Robinhood, or both, in order to qualify for being a participant in our contest. You need to sign up to these accounts, and we'll need access to them, and we're going to help with money and making the trades, and all we ask for in return is for you to participate and have some fun and make some money. Hopefully win us some money and trade effectively. And I have full confidence that if you take our course at StartTrading.com and follow along with us, or follow along with myself and other people will be presenting soon, that you will be successful. So thanks for watching. Mark Bauman, StartTrading.com.